Alright traders, I'm back again with another video, and we want to start looking ahead to what's going to be happening next week. And by doing so, we want to make sure we're fundamentally sound. So we want to check the news for the week. We want to make sure we know what's going on with the trades, with the pairs for that upcoming week. And that day, maybe if you're in a trade, you want to make sure you know what's going on, because you don't look at the news and you don't see what's happening that day, and here's some major news events happening, and boom, your trade is shot, and you're wondering what happened, and you're wondering why you lost, and then you say the Ichimoku system didn't work for you, and this and that. Well, you have to know everything. You have to see what's happening that day, know what's going on with the news. So we're going to look at the news events for the upcoming week, and it's going to be Eastern Standard Time, starting off on Sunday. We don't have anything major. We're going to look at the high importance of things. So anything red, we'll look at. Here's some medium things and low things, but we're not going to look at all those. You can see them, look at them for yourself, and make sure you know, because they can affect your trade. So nothing really happening on Sunday, but then Monday, we'll come to Monday, and we have the dollar has something happen about 10 o'clock in the morning, which is going to be the ISM manufacturing. So look for that. That's going to be of high importance. That can affect your trade. And you have stuff happening with the dollar throughout the day between 7:20 and 5 p.m. So watch out with the US dollar on Monday. And then coming down to Tuesday, we have something about 12:30 a.m. It's going to be the Aussie Reserve Bank of Australia rate decision. That's going to be of high importance. So if you're awake at that time and you're trading, or you have a trade that's going on and you're going to let it go overnight, make sure you know that this is going to happen, and you may want to close that trade before that. And then that same day, about 9:30 p.m., we have the Aussie Gross Domestic Product. That's of high importance. That can affect your trade. So then Wednesday, we come to Wednesday, we have about 5 a.m. the Eurozone Gross Domestic Product. It's going to be a high of importance. It's going to affect your trade. And then we have the dollar having things all throughout the day between 7 a.m. and 2 p.m. Nothing of high importance, but some medium importance things, and there's a possibility they can affect your trade a little bit, so there too, so watch out. Then we come to Thursday, we have two high important things for the pound: the Bank of England rate decision and the BOE asset purchase target. So those can affect your trades at 7 a.m. Eastern Standard Time on Thursday. And then also we have the European Central Bank rate decision for the euro, and the ECB deposit facility rate. That's going to be high importance. Those events will affect your trade. You will see some movement in the market about 7:45 a.m. Eastern Standard Time on Thursday. So watch that. If you're in a trade, I suggest you close that trade and wait. I don't trade the news. I just want to know what's going on with the news. And if I know if there's something of major importance, I probably don't get in a trade. I definitely don't get into a trade, and I definitely try to close my trade before that happens. So then we go to we have Friday here. Looking at Friday, we have the dollar with some serious news at 8:30 a.m. and it's going to be the unemployment rate and the changes in non-farm payrolls. This will affect your trade. There's going to be some movement there, so you'll see some spikes, and you'll see the market doing whatever, and you'll wonder why. This is why. Look at the news, know what's going on. CAD unemployment rate and net change in employment will happen about 8:30 a.m. Also, that's high importance with the CAD. So the dollar and the CAD at 8:30 a.m. on Friday will close out the week with high importance news events, and we'll continue on, and we'll move on to our analysis. We're starting off here with the euro dollar, and we're on the monthly time frame, folks, and we're going to do top-down analysis. We're working our way from the top to the bottom, looking at the higher time frame down to the lower, see if we can find any clues, anything that can let us know anything. But I'm going to tell you one thing: trends start from the bottom up, so they're going to start on the lower time frame and work their way up. So that's how we can look for counter trend trades. But you don't just jump into a counter trend just because. You want to know why you're getting into a counter trend, and you want to know where the market may pull back on a primary trend to have a correction where you can get into a counter trend trade. So whenever you're counter trend trading, you're getting in on a correction. You're not getting in on the primary trend. So it's just going to be a correction of the primary trend, and you have to know how to find those, and we're going to look at some of those right now. Looking at the euro dollar on the monthly time frame. Basically, folks, what I do here, dash lines will stand for the monthly time frame, and the color will be the color of the Kumo. the color of the Kijinsen, and if you see a red line, that's going to stand for just the fractal support levels or a regular support level that I put in. So it'll be a dash line, the color coded for what it is, and then I know the time frame. And when I'm trading on a time frame, I know what, if I come up to a monthly Kumo or something, I know that by seeing the dash line there. So I know that that's going to be a strong support and resistance area, and I know that maybe my trade will not work or whatever, however I want to use that to my advantage. So basically, looking at this monthly time frame, we're just getting at those levels. Those will stand for strong support and resistance areas. We're not really getting market bias because this is too far out for us on the time frame that we trade. Now we'll go down to the daily time frame. Any solid line is going to stand for the daily time frame. So you'll see a solid red or purple or blue. The blue is going to be the Kijinsen, the purple will be the cloud, and the red will be the support and resistance again. And I know this right here, this is the monthly Kijinsen right here. So if I ever got up to that level, I know what that is, and I know that I might have a hard time getting through that. So on the daily time frame here, this is still a bearish market. Everything's looking pretty bearish here. Now I want to see one thing on the daily time frame. If we get above this Kijinsen and close above that level, then we'll be looking for the next thing to get above this cloud. Right now we're pretty neutral, nothing happening. You could see no momentum in this market basically on the daily time frame. You have some moves here. We're basically in a little range here. You could see where the market is starting to kind of make not really, it looks like there's a possibility of it starting to make a symmetrical triangle, but not quite yet. So we'll see what the market does. Let's go down to the 4-hour time frame. Eventually, folks, I'm going to have a better computer, a new computer one day, and then I won't have all this crazy stuff popping up on my screen while I'm trying to explain things to you. But here we go. What we like to see here is, now this is going to be a 50% retracement level right here, right where that Kijinsen is, and you can mark it all the time. I don't even have to do this because I know that this is a 50% retracement level, and I can see price pulled back 50% and then it took off. Now price does that on all time frames, so that's why we look at that Kijinsen as our pullback level off of the correction. Now it's not going to always pull back to that level, and it's not always going to pull exactly to that level, but it's an area that you look for. So now it pulled all the way to that level, bounced off of that level, and then you could see where basically where this wick here showing that the bulls pushed this thing all the way back up. Now if this candle closes right here, there's a possibility we could get in off the 50% bounce off the Kijinsen, and we put our stop loss below this wick here because we're going to use the Kijinsen as our support level, and then we take this long. Okay, but then what really will look good for us, since the daily time frame is still bearish and not really showing us anything, this level right here, if we get above this level and close above this level is the daily Kijinsen. That means price closed above that level on the daily time frame. If price closes above that level, this also means that we have a change in trend maybe. So anytime you close above the Kijinsen or below the Kijinsen, that can be represent maybe a possibility of a change in trend. So price coming up to here, closing above here and staying above here, yeah, possible change in trend, we go long, and we look for our areas that we can ride this market to, and we look for our short levels first, and then we step this up all the way to that next level that we saw on the which would take us way up here. But that's long term. We got to look at our other levels first. All right, a lot of things can happen in between that time. Okay, so that's the euro dollar. This is the US dollar yen on the daily time, on the monthly time frame, and you can see this is beautiful right here. Like I said, pullbacks happen on every time frame. All right, so here goes the market going up, and now it couldn't break this cloud. You could see the cloud here, and today's the end of the month, so this candle is going to close here with this nice wick representing weakness at this point, where the bulls couldn't push this any farther. They got it up this high, but the bears pushed this right back down, representing that on a monthly time frame. This is a 200 pip move right here that it pushed it all the way back down. So if I look at that, then I say maybe we're going to have a correction here off of this long move, and the correction would lead us to a 50% retracement level. This is where we look for a counter trend saying that we're going to take this short. If I look at this, I'm saying, oh, I'm looking for something long, but I'm going to go down to two more time frames and show you. So this level would be my 50% retracement level. Now, not saying that we're going to always go that far. We could probably end up going this far and then going. But then at either rate, we're not trading the monthly time frame. We're just getting our levels that are going to be of importance for support and resistance. Let's go to the daily time frame. Remember what I told you earlier, trends start from the bottom up. Alright, so a correction is going to start from the bottom up, and that's how you look for your counter trend move. So if we want this, we're looking to go short. This daily time frame is telling me everything is bullish, so I should be looking for long trades. And let's go to the 4-hour time frame. Now the 4-hour time frame, the only way I will trade this pair is if I can get a close below this level on the 4-hour time frame, get a candle close below that, and then I will trade this short, because like I said, moves start from the bottom up. So the 4-hour time frame will represent showing this downward move first. Alright, but now possibly a few things can happen here. We have this level here. This is a daily Kijinsen level right here, this dark blue, the blue line, and then the purple line here is going to be the monthly, that's the top of that monthly Kumo from the monthly time frame. So we know these levels here are very strong support and resistance levels. Now with this right here, it's going to be a support level because price is above it. Now what could happen is price bounces and takes us up to this level. We're not going to trade anything on this, so we're going to wait. Price bounces at this level. There's a few things that we could do. Be an aggressive trader, and you can trade the bounce off of the Kijinsen. If price retraces back to there, bounce off of the Kijinsen, because that will be the 50% retracement level of this move from here to here. Retrace up to the 50 and then go. And then if we're in up here, this is all free trade for us until we get to this level right here. And then if price can break that level, we bring our stop loss all the way down here, and we've made this, and then we can let this ride for us. Alright, but I want to show you something that you probably don't see all the time. What you have to look for this and make sure you see this. And one thing I tell you, I don't trade the TK crossovers, because I always notice one thing. When you get a TK crossover like you do here, and here's a crossover, every time there's a crossover, price pulls back and then it goes. Now that's what I notice. Not every time, but most of the time. So I don't like getting in on those TK crossovers. But an aggressive trader could have got in here, got in on the crossover, but if you got in on the crossover, you may have gotten in way down here, and then price pulled all the way back up here. You'd have to have a stop loss way up here. I mean, that's a forever stop loss, and that's not a good trade. Okay, but then you have this bounce here, but see, we're inside the cloud. So now we come out of the cloud, price came back up, and now you have a crossover here. Now see this crossover here, this is a very strong TK crossover, and the reason this is strong is because this is happening in bearish territory below the cloud. So a bearish signal in bearish territory is a very strong signal. This same signal up here is a weak signal because it's a crossover, a bearish crossover, but it's up here in the bullish territory, so it's not a strong signal. Now this strong signal, we didn't have much of a pullback. Here we did. Probably would have taken you out if you got in here. If you wait for the end right here, you still would have been. You see this pullback all the way up here and went way up here, way past the Kijinsen. But then you see it close way down here. Here's the thing that you really, really would love. You see this long wick here, we couldn't break the Kijinsen level, right? So the trade is, price moved all the way up here and got pushed all the way back down, and then we enter here and put our stop loss above this level, above this Kijinsen, because it looks like it's not going to violate the Kijinsen because it didn't do it this time. So it looks like it's holding that level as a resistance level. But that's what you look for. Those are things that you look for. Now we want to look for price to come back up, bounce maybe, and then maybe get down through this level. Now the only way we'll take this long is if we get above the cloud. Okay, so if we get above the cloud here, then we know two things: that we're moving on with the monthly time frame above this Kijinsen here. I mean above this Kumo here, the monthly Kumo, and then we're on the daily time frame. We're moving on with that too. We're above that Kijinsen. So our trade will be moving on, and we'll know that yeah, long is the way to go. Okay, but right now we want to see what the price is going to do here in this area, and we have to wait and see what's going to happen here. So there can be a lot of things happening here. This is a good setup here. Maybe if this can close below this level, we'll get that pullback, but we have to see what happens. All right, so the monthly time frame, I told you that there's going to always be corrections. Okay, so here's the trend going up this way, the monthly trend. So it started here, pull back, kind of consolidated range, started going again. Now it needs a correction. Here's the correction level, 50% retracement level. And folks, please don't hold that as gospel. It's not always going to pull to that level, but that's a level that you look for. All right, it does it a lot, but I'm not going to tell you it does it all the time, and it doesn't hit it exactly. So remember that it's that area. Support and resistance levels are not a line. They're not a line at all. They're an area like this cloud. This is an area of support and resistance. All right, so this area could be this thick or whatever. So don't look at support and resistance as yes, it has to come to this line and that's support and resistance. No, that's not it. All right, so we're starting to see something. This can become a fractal level here because you have your two on this side, then you have this one here, and if we get a candle here, close here, that's a fractal level showing this going down this way, going bearish fractal, and this will be our level. So if we're looking for a pullback on the smaller time frame, we're going to be looking to go short because we're saying that this big time frame is pulling back. Now let's see what the daily says. And see, the daily is setting it up right exactly for us. The daily is perfect. Today this candle closes below the Kumo. The thing is, we get into the trade. We take this trade short and ride this as far as we can, hopefully down to these levels. And this is where I would shoot for with this. You know, you have to put your other levels in to make sure. But other than that, make these levels your levels that you want to see the price get to and violate, and then finally ultimately get down to here. So I love this pair right now, the way it's setting up. The monthly is telling me that it's going to pull back because you got that one candle. Let's look at that again. Let's explain this one here. The monthly is telling me pull back because you got this, and then you got this wick pulling down, then you got this red candle closing, this monthly candle closing without breaking this level, and then here's my 50% retracement level. I'm looking at pullback. Okay, so the daily has a Kumo breakout, and then you got a TK crossover right here. Well, you already had it up here, and now they're just touching because the momentum is very strong here with these pointing straight down like this. This is very strong momentum. Here the market has no momentum right here, and now this is strong momentum. This is like really, this is textbook for the Ichimoku system. You have this cloud breakout, you have momentum, you're below the price with your Chiku span. This is really textbook. Now the thing that can happen here is maybe we see the next thing happen. Maybe it comes back up and pulls up to this level and then goes again, or else it continues to go. There's a few things that could happen. Let's go to the 4-hour time frame, try to get in on this with the 4-hour time frame, and see the 4-hour time frame. Really, we would have wanted to get in on this candle right here with this candle. So this candle closed, we get in here, put our stop loss up here. and then it goes, and then maybe it comes back, pulls back. So on the 4 hour time frame, we would love to see this pull back. All right, so that way we can get into this trade. I don't want to get into the trade down here and put my stop loss way up here. I want to get a better location. So right now we're probably looking at, let's see where we are here. Let's go back to the daily. Yeah, we're far. So we're like one, two, almost 300 pips away on the daily, about 280, 250 on the daily from the Kijun-sen. So you don't like, you know that the market has to get back in equilibrium. Now it could still go a little farther and then pull back, and then our pullback level, we look for this. All right, because that's the going to be the resistance level. But we're getting out of equilibrium by getting this far away from the Kijun-sen. Price does not want to be too far from home. Home is the Kijun-sen, and price doesn't want to get lost, so it's going to revert back to that Kijun-sen. That's why I'm always telling you the 50% retracement level, which is the Kijun-sen. So on that 4 hour time frame, this is a trade that I'm really going to be trying to get into, find that level to get into. And traders, all the things that we've been going over, you got to be able to find these levels and get in. Now, if the market continues to move down on me and doesn't make a fractal level here or somewhere in here, then I have to really wait on this. Hopefully this market will pull back. I want to see a pullback, and hopefully we can come to this level and then we take the trade. Or else if it doesn't pull back that far, I'll take the break of a fractal level and take this long. Take this short. So that's what we're looking at, the New Zealand dollar, yen. This is a monthly time frame of the Aussie dollar, and look at this right here. This red line, this dashed red line, is the monthly time frame support and resistance, and then price is in that area right now. We can also put a line here, and I'll show you this. This is just support and resistance right here on the monthly time frame, and we can make that dash because that's our monthly time frame. This isn't of relevance to us right now, but it will be one day when price gets up there. And then we could also put one up here at this top level. So you have it here and then you have it here. No need for me to do that right now. Just putting in strong levels of support and resistance. Here you see the cloud. If we break this level, maybe this is going to be a level for this on the long term. Let's go to daily. Daily, I'm looking at this. It has to pull back. It's getting so far away from the Kijun-sen. Again, market's getting out of equilibrium. We're oversold. Let's see. Now this move here, from here to here, 50% retracement level is right here. So maybe the market retraces and pulls back. There's nothing definite on this chart showing me anything good. Let's see this monthly again. The monthly maybe is telling me if we don't break this level that we're going to stay in this range. You can see this range. This range has started when the market came up, hit this level, came back down, and stayed in this range. It's been in this range since way back here, really. So September of 2011, been in this range right here. So do we think the market's going to break lower? I don't know. Daily time frame. Looks like the market needs to pull back. So, but anything can happen. But just getting that far from the Kijun-sen just tells me that we're out of equilibrium. We need to pull back, and if we can pull back, then maybe we look for something else, bounce off of this Kijun-sen and take it back down to this level. But if price continues to go on, then it breaks out, then we look for something else on that aspect of the market. Alright traders, this is the Euro Yen on the monthly time frame. Again, this may not be ready to pull back, because maybe this level might be the level of the pullback. but then again maybe it goes up to here. And this Kijun-sen will still always be your level for your 50% retracement pullback. So on the monthly time frame, all I put in on here was my Kijun-sen level, and I have this level right here, my cloud. That's on the monthly time frame. That's all I'm looking at there. Daily time frame. Everything is bullish here. We're getting into a little range, no momentum at all. You can see both of the Kijun-sen and Tenkan-sen are flatlining. They're dead. The heartbeat is gone. This market is dead here. It's staying in this little consolidated range. It has to break out eventually either way. So a breakout below this level or a breakout above this fractal level right here. A breakout above this fractal level, and that's the long trade. A breakout below this level, we need to be below the cloud. But this is on the daily time frame, so everything is telling us for a long trade here. But again, trends start on the bottom, so if we break this level, we'll start. This will start here. Let's see what the 4-hour tells us. And the 4-hour isn't showing us anything long right yet. To be long on the 4-hour, you need to get above this cloud. So what we're looking for is something short. Hopefully that we get a close below this level and we can put our stop loss up here and try to see if this market wants to go short. And that's what we're going to look for near term for a short trade here. This market is all over the place. You can see the range here. It's not really doing much. You got all these crossovers. You see all these crossovers. TK crossover, boom, 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 boom. This means the market is ranging. It's not doing anything really. You want to see this market break out of this range, get out of this level right here. So if we can break this level, we'll take this short. If we can break above the cloud, this will be the long trade. The long trade with the daily is representing is above this. Now we got a crossover, and it's a strong crossover, and then you got it touching here. It'll be another crossover basically, and you got Chiku span still in this price realm. Chiku span needs to get down here. You got a Kumo twist that is bearish, so everything is bearish on the 4-hour time frame, and we just need price to close below this level, and then I would look at the trade below this red line. Close below that, then I'm looking at my trade, put my stop loss. Depending on your money management, I put my stop loss up here, or I just put it a little bit above that support and resistance level. Alright, this is the pound dollar on the monthly time frame here, and I'm not getting much signals off of this, but I just wanted to get these levels in here. So you see the top of the cloud. Here's your Tenkan-sen, and then price is doing nothing at all. Maybe a symmetrical triangle, maybe, kind of, on the monthly time frame. Let's go to the daily. And the daily, man, I really don't know. I'd like to see this. The only way I trade this long is if we get above the cloud. So we get above the cloud. Chiku span needs to get outside that cloud. We got a crossover, bearish crossover, which is a medium signal. It happened inside the cloud. So everything is telling us short right here. So we'd have to get below this fractal level here. So we want to get below that fractal level. If we could get below that fractal level, then we can take this short. Here's that fractal level. So close below this fractal level and we could take this short. And other than that, we need price to get above the cloud. So this is bearish, but here's your levels. This is going to be that this is going to be, what is that? Because that looks like the, I might have messed that one up. Let me see what that is on the monthly time frame. Okay, that's supposed to be a solid line, a dashed line. I got that wrong. Made the wrong one. It's supposed to be that. That'll mix me up. I won't know what I'm looking at. Okay, so let's go back to the daily here. Yeah. Everything is bearish here on the daily, and everything is bearish on the 4-hour. No, the 4 hour is bullish. What am I saying? The daily is all bearish. The daily's bearish, and it's telling us to take everything short. And for me to tell you counter trend, this is the move from here to here, and that's the 50% retracement level. The market could move up to that level. So where is that level on the 4 hour? Yeah, this trade I was looking at earlier, and I wanted to get in right here, but it's Friday and I didn't want to get in on Friday, and it happened perfectly. It bounced here, and then I could have put, as soon as I saw this long wick and the open of this candle, I could have put my trade in here and just put my stop loss. I can even put it down here because that's not going to be too far from me. But you probably think about riding this to this level. This is that daily Kijinsen, so that will be the 50% retracement of that daily move down. So that's going to be the correction. The correction will be to here. So you break this level. Now the good way to get into this trade, since we didn't get in on the bounce, would be number one, to break the fractal level, or else break this level right here, because this is the daily cloud. This is that cloud. This bottom of the cloud, and you can see that price is hitting on the bottom of it and can't get through. If price breaks through, closes above that, we can put a stop loss a little bit below there and just ride this to that level. And then if price breaks this level, we continue on, move our stop loss up to there, and this is guaranteed money right there. All right, so this is another setup that could be good. You got everything on this chart is bullish. Price is above the cloud. TK crossover, medium strength inside the cloud. You got a Kumo twist right here, that's bullish. Your future is bullish. Your Chico span is bullish below the price, but you're getting ready to run into the cloud here. But it's not a thick cloud, really thick. If we can get it on here like this, and maybe price ranges a little and takes off. So we'll be, if we can get above this level, we want to look for this level. All right, that's dollar yen, pound dollar. This Aussie yen, this is a monthly time frame. Look at this monthly candle here. Long wick pulls down. Bulls pulled it, the bears pulled it all the way back down. So then you have this candle here. Monthly candle, red candle coming all the way down to here. This is going to become a fractal level. With the next candle close, we could be close to this level. This will be a 50% retracement of that last move. So the market is correcting itself, comes back 50% retracement. Not always 50%, but that's the level we're looking for. All right, so here's your levels on your monthly time frame. Let's go to the daily, see what we have. And see, this is almost like that the other pair that we looked at where we have the breakout, and then here it is, the same thing basically. Price broke out, but see, this long wick candle would have told me, oh man, this level is being held, but then it broke out. But you got this crossover that was medium. I don't always listen to these candles, but sometimes they tell you some good things, especially with these long wicks, but it wasn't right there. Now here where we came down, we closed below here. This is far to get into the trade and put your stop loss up here, but if you did, you would have still been safe. I don't like to get in that far away. So what happens? The market pulled back, came close to that level. And traders, this is where we want to get into the trade, close to these support and resistance levels. We couldn't get in there. We have to wait for the break of that fractal level. All right, so if we break the level, we'd be in here. But looking at this, man, this is really set up nice to ride down to that, close to this level, because this is that 50% retracement level of the monthly time frame. So you expect price to move down to that level. Now this is long-term, traders. If you don't trade long-term, you're not looking like this. You'll probably take your trade and get out when you see things happening. But I'd like to see for this pair now. I don't know if price is going to pull back yet after making this candle here. So if we could get a pullback or get a fractal level, yeah, we'll get the pullback and have a fractal level develop. We could get in on the fractal break or the pullback, depending on where the pullback goes to. If it can pull all the way back up to here or wherever the Kijinsen is going to be at that time. So this is the daily time frame. 4 hour time frame, I don't really like the way it's all setting up. It's not giving me anything really to make good levels with. So I really want to see this market pull back. On this pair on the 4 hour time frame, I really need to see this pull back close to this Kijun before I get in. So I can get in on the Kijun bounce or maybe break of the fractal level. So that's looking at the Aussie yen. That's everything for the whole week. That's what I'm looking at. Those are going to be the pairs that I'm looking at. I saw some very good trades on there. Traders, everything I tell you is just for educational purposes. I'm not offering or telling you to take a trade or telling you which trades to take. I'm telling you what I might do or what I would do. So, and I'm not going to offer any trade recommendations as far as saying if you ask me what trade you should get in. I'm not going to tell you that. I'll tell you purposes and reasons why I would do it, and then you have to decide if you want to do that. But other than that, traders, that's gonna be it. Hopefully I'm helping somebody, and until next time, may God bless you as always. So long.